Okay, so now we'll be starting with the last question, question number 5, which is related to errors. The question says Razia's financial year ends on 30th September. Right. The totals of the trial balance on 30th September 2020 did not agree. Okay. And the totals were debit 10,450 and credit 10,250, which means that there is a difference of $200. The credit side is shorter by $200 than the debit side, and therefore a suspense account was opened. Right. Then after the preparation of the trial balance, these errors are discovered. Right. So we have to correct these errors, and therefore you are asked to prepare the suspense account in part A. Then you will be asked to name some of the type of errors that are there in the books of accounts, and then we have to indicate whether by correcting each of these errors if the profit will increase or will it decrease, or there will be no effect, and then there is a theoretical part at the end of this question. So let's begin. Now what we will be doing, we will be reading each of the errors one by one, and we will be correcting them there and then by making the correcting entries, right, the double entries, right. So for that we can use the blank pages that we have, right. So in this exam we have 1, 2, 3 pages, right. So you can use those to make your correcting entries. So error number 1, the total of the sales returns journal had been overcast by $300, right. So there's a problem in the day book. Sales returns day book has been overcast by $300. This means that the same balance, which is an overstated balance by 300, would have been carried to the sales returns account as well, right, because the total is posted from the day book to the sales returns T account, and it is right now overcast by 300. Now we know that sales returns has a debit nature. Why? Because sales returns increase our inventory. That is why sales returns are always debited. Now they are overcast by 300. This means that more is recorded on the debit side, that is $300. And one more thing is that the problem is just in sales returns account, right, because the total was wrong, not the individual entries. The individual entries are correct, which are posted in the debtors account. So there is no problem in the debtors account, just the sales return account is overcast by $300. So you have to correct that entry only. Now since the problem is just in one account, that is the sales returns account, so the correcting entry, the double entry, will be completed by making an entry in the suspense account. So this is error number 1. Now what will be debited and what will be credited? First of all, you will be crediting your sales returns account in order to bring the balance to the original figure, right. So sales returns will be credited by $300 because sales returns has a debit nature, so in order to decrease it, we will be crediting it. Then the corresponding entry, that is to complete the double entry, the debit part will be your suspense account. Suspense account will be debited by $300 because there was a problem in just one account, and this has affected the trial balance, the balancing of trial balance actually. So therefore suspense account will be debited. Then error number 2 says cash sales 820 had not been recorded in the books of account. So this is what we haven't recorded the cash sales at all in the books, that is they are not recorded in the cash book and then in the sales account as well. So first of all, what type of error is this? When the transaction is not at all recorded in the books of accounts. This is called your error of omission, right. The transaction has been completely omitted from the records. Now in order to correct this error, you just have to make the double entry that should have been made in the first place, right, because we haven't right now debited cash and we haven't credited sales, so that we just have to do in order to correct this error. And so therefore this will be corrected by, we will be debiting cash by 820 and we will be crediting sales by 820 as well, right. So suspense account is not involved in this correcting entry because this was that error which does not affect the balancing of trial balance. Now let's move to third one. It says a purchase invoice 190 had been credited to the account of P Hill instead of D Hill. Okay, so there were some purchases, and we know whenever there are some purchases on credit, these are recorded as purchases account is debited and your supplier is credited. Now what happened over here was, instead of recording the purchases from D Hill, we have recorded them in the account of P Hill by crediting P Hill. Now this type of error is called error of commission, right. Both of these are assuming that both of these are your suppliers, Razia's supplier. So instead of crediting D Hill, she has incorrectly credited P Hill. But whenever the error is in the same class of account, assuming that these two are the suppliers, this type of error is called error of commission. So now how we will correct this? First of all, the entry is not made in the original supplier's account, that was D Hill. D Hill should have been credited. So now we will be crediting D Hill first. So error number 3 will be corrected by D Hill will be credited by 190, and we incorrectly credited P Hill. So now to eliminate this transaction, the effect of this transaction from the wrong supplier's account, we will be debiting his account by the same value 190, which will eliminate the effect of the transaction by recording an entry on the opposite side of his account, right? Previously he was credited, now we will be debiting P Hill, and we will be establishing the correct entry in the account of D Hill by crediting his account. Error number 4 says a check payment 240 for motor repairs. Okay, so a check payment for motor repairs, what should have been the double entry? A check payment, right? So bank account will be credited and motor repairs being an expense should have been debited. But now what happened over here was had been correctly entered in the cash book. Very good. So cash book has been correctly credited, but had been posted to the debit of motor repairs account as 420. Okay, so there is a problem in the amount. The account is correct, the side of the account is also correct, but the amount is wrong over here. The original one was 240 and this is what? This is 420, which means that the account has been overstated by $180 than the original value of the transaction. Okay. So now in order to correct this error, first of all, cash book will not be used to make the correcting entry because there is no problem, there is no error in the cash book, just in the motor repairs account. Okay, right now it is overstated. Now in order to bring the balance from 420 to 240 in an expense account, we will be crediting this account, right? So this is what? This is error number 4. And we will be, first of all, we will be crediting motor repairs because right now it is overstated. More is recorded on the debit side by the difference, right? By the difference 180, and since there is no problem in cash book, just one account is affected. So the correcting entry will be completed by debiting your suspense account by the same figure 180, right? If I show you this in the T account, so motor repairs. Right now we have recorded how much on the debit side? We have recorded 420 on the debit side. The original value was 240, right? So more has been recorded on the debit side. Now after making the correcting entry, I will be crediting 180 in motor repairs account because of suspense. So this will bring the balance of this account just as per the original value of the transaction, and that was 240, right? So 240 will be transferred to your income statement because this 180 will offset the effect of the overstated amount that is recorded previously, right? Now error number 5, rent received. Rent received is what? It is an income for the business, right? 310 had been debited to the rent payable account. Okay, so rent payable is what? It is an expense for the business. We know that all the incomes are credited and all the expenses are debited. So we have recorded an income as an expense by debiting an expense account. Now, first of all, what have we not done? We have not recorded the income by crediting it. Instead, we have recorded this as an expense by debiting that account. Now, how will we correct this error? First of all, we will credit rent payable account in order to eliminate the effect of the wrong entry, right, by the original value 310. Because this should not have been recorded in the expense account at all. Then we will establish the correct entry in the correct account, that is rent receivable should have been credited. So we will credit that account with the original figure 310. Now since both of these accounts are being credited, in order to balance the double entry, we have to record something on the debit side, and that will be suspense account, right? So because of this error, because of recording an income as an expense, your trial balance did not balance, and therefore there was a balance in the suspense account. Now we will complete the double entry by debiting suspense account with the sum of these two figures, and that would be 620 debit, right? Now Let's move to error number 6, second last error. Staff wages 250 had been posted to Razia's drawings account. Okay, so drawings account is what? Drawings account, we know that it has debit nature. So wages, instead of debiting wages, we have debited drawings account incorrectly. Now this is a very simple adjustment. How do we correct this error? First of all, establish what should have been done in the correct account. Wages should have been debited, so wages will now be debited, and eliminate the effect of the wrong entry by crediting your drawings account, right? Because right now they are debited. So error number 6, wages will be debited by 250 and your drawings account will be credited by 250 as well. Okay, moving on. Last error. A check paid 900 to Kamil, a credit supplier. A check paid means bank credit and Kamil should have been debited. Had been entered correctly in the cash book. Very good. So cash book has been correctly credited but had not been posted to Kamil's account. So again the double entry is not complete in this transaction. We haven't debited Kamil's account. Now, in order to correct this error, how do we correct this error? Again, since there is a problem in just one account, so therefore to balance the double entry, we will be making an entry on in the suspense account as well, right? So Kamil should have been debited. First of all, Kamil will be debited and the amount is 900, and then suspense account will be credited by 900 as well, right? Because there was no problem in cash book, just in one account. So we are done with all the errors. Okay, now let's prepare the suspense account. Part A says prepare the suspense account. So start with the balance arising from the difference, right? So we concluded that there is a difference of 200 on the credit side, right? The credit side is $200 shorter than the debit side. So this is the difference as per trial balance. And the account should be balanced or totaled as necessary, right? So balance means if still there still remains a balance after correcting all the entries, then it should be balanced. Bring down the balance whether it's on the debit side or credit side, or it should be totaled. Total means that there will remain no balance in the suspense account. Okay, so let's see whether we will be balancing it or we'll be totaling it. So first of all, we will start with the difference as per trial balance, which is on the credit side. Okay, and what are the dates? The dates are 30th September 2020. We are correcting all of these errors on the same date, 30th September 2020. Okay, now we will be going to our correcting entries to find out which of these requires an entry in the suspense account. So error number 1 required an entry. Suspense account is being debited by 300 because of sales returns, right? So same, September 30th, sales returns will be credited because you remember these were overstated by 300. So suspense account will be debited by 300. Done. Then error number 2 did not require any entry because this was an error of omission. Remember, no entry was made in the account, so no effect on the suspense account. Again, this was an error of commission, no entry required in suspense account. Then error number 4. Right, so what did we do over here? We recorded motor repairs as, remember, 420 instead of 240. So therefore, suspense account is now again being debited by 180 because of motor repairs. Same date, September 30th. Done. Then error number 5. We recorded an income as an expense, so we will be debiting suspense account because of these two accounts, rent receivable and rent payable, 310, both of these to be written separately. Okay, then second last, error number 6, again no entry in suspense account, and in error number 7 there is an entry which is suspense account is being credited by 900 because of Kamil, right? We did not record a check payment to our supplier. Error in just one account, so suspense account will be credited by 900 because of Kamil on the same date. Now let's see. The total on the credit side would be 900 plus 200, 1100, and on the debit side it will be, oh, that's same, and that is 1100. This means that there remains no balance in the suspense account and we have totaled it. So this means that you have correctly corrected all your errors and your suspense account is totaling. Very good. Now let's move to part B. Part B says identify the types of error made in error number 2 and error number 4. So in just error number 2 and error number 4. Okay, let's see. Let's read the errors again. Cash sales 820 had not been recorded in the books of accounts. So we know that this is error of omission when the transaction is completely omitted from the records. So error of omission. Now error number 4. What is happening in error number 4? A check payment 240 for motor repairs had been correctly entered in the cash book. Okay, so one account is correct. However, it had been posted to the debit of motor repairs as 420, right? So whenever there is a problem in the amounts, right, 240 and 420, they look similar. The problem was in the digits. They are wrongly positioned in the transaction that was recorded, right? 420 is being recorded, however the correct value was 240. So such type of errors are called transpositioning errors when the digits are not positioned correctly while recording the transaction. So this is a transposition error, but the error is not in both the accounts. Otherwise it would have been called just a transposition error. So you will write it properly, and that would be a transposition error in one account. Error of transposition in just one account, and that was motor repairs account. Now let's move to part C. Complete the table by placing a tick in the correct column to indicate the effect on the profit for the year of correcting each error. So after the correction of the error, you have to tell that whether it will increase, decrease, or there will be no effect on the profit. Now how do we go about for such parts? You have to go to your correcting entries again, and then identify all the components or all the accounts that become part of your income statement. And what goes in your income statement? We know that sales, sales returns, all the components of the cost of sales, inventories, purchases, and carriage inwards. So that goes in the cost of sales. Then all the incomes and all the expenses, so that you have your profit for the year. Only these items affect your profit, right? Your assets, your liabilities, your drawings, they do not affect your profit. So first of all, identify all the accounts that will affect your profit. So in error number 1, there is an account which is sales returns account, which is being credited. We know that sales returns are subtracted from sales in the income statement, so that you have your net sales, right? So this will affect your profit, right? Profit will be affected. Now what is happening over here? Sales returns are being credited by $300. You remember previously we overstated our sales returns. Whenever sales returns are overstated, this means that more sales are being returned to you. So you overstated that. Now by crediting it, we are decreasing our sales returns. That is, not that much sales were returned, right? So by decreasing your sales returns, your net sales will increase, and that will increase your profit as well, right? So that is how you will make a connection. You will link that how this account, if it is being debited or if it is being credited, will affect my profit. If sales returns had been debiting over here, this means that, for instance, you understated the sales returns previously. Now by debiting sales returns, you are increasing your sales returns, which will reduce your net sales, and it will reduce your profit as well, right? So right now we are crediting sales returns, which will increase our profit, so profit will increase by correcting this error. Now what is happening in error number 2? Cash is being debited. Okay, so cash, we know it doesn't become part of the income statement, it goes in the statement of financial position, and sales are being credited. So sales, we know that it will go in the income statement, and sales are now being credited. So sales have a credit nature, right? Whenever you credit sales, you increase the sales, and then if your sales will increase, this means that your profit will also increase, right? We remember in this transaction we omitted the recording of this transaction. So now by recording sales, your profit will also again increase. So error number 1 and error number 2, we are done with these two. Error number 3, P Hill debit, D Hill credit. We know that both of these are the suppliers of Razia's business, right? These are the suppliers, and suppliers are recorded in the statement of financial position, not in the income statement. So they will have no effect on the profit. So you will place a tick on the third column, right? Now let's move to error number 4. In error number 4, suspense is being debited. So suspense account, again suspense doesn't appear in your income statement, so you will not see that whether suspense is being debited or not. You will find out the account that become part of your income statement, right? Motor repairs are being credited. So motor repairs, we know that they are the expenses and they become part of the income statement. Now expenses have a debit nature. This means that whenever expenses are incurred, whenever they are increasing, they are debited. However, over here we are crediting expenses. You remember we overstated the expenses, that is why we are crediting them now. So this will do what? This will decrease your expenses and then your profit will increase. Because previously they were overstated. Now you are decreasing them by correcting this entry, by correcting this error. So expenses will decrease and this will again increase your profit. So error number 4 will also increase your profit. Okay. Now what is happening in error number 5? Correcting entry number 5 actually. Rent payable is being credited and rent receivable is also being credited. So we know that both of these, they do appear in the income statement. Rent payable in the expenses section and rent receivable in the income section. Now rent payable is an expense and we are crediting an expense over here again, just like we were doing in error number 4, correcting entry number 4. Whenever you are crediting an expense, this means that you are decreasing an expense, which will do what? It will increase your profit. Because previously we recorded an income as an expense, we established an entry as an expense which should not have been established at all. So now you are decreasing an expense which will increase the profit. Then by crediting an income which was not recorded previously, you are increasing your income, which will increase the profit as well. Incomes and profits have a direct relationship. However, expenses have an inverse relationship, or an indirect relationship. So incomes will increase, profits will also increase. So both of these accounts, because they are being credited, they will increase your profit by 620 in total. So error number 5 will also increase your profit. Then error number 6. Okay, wages are being debited, so we know that wages is an expense. And drawings we know that they appear in the statement of financial position. Now wages are being recognized as 250 because they are being debited, increasing an expense, because you remember we recorded wages in Razia's drawings account. So that is why we are correcting this error. Wages are now being debited. So this means that your expense will increase. Expenses have a debit nature. And this will do what? It will reduce your profit. By recognizing wages, your profit will decrease. Okay. Then moving on to the last one. Kamil being debited and suspense account being credited. So Kamil was again, he was our supplier. And we know that all the suppliers are liabilities, they go in the statement of financial position, they have nothing to do with income statement or profit. So again, by correcting error number 7, there will be no effect on the profit. So this is a very easy method to identify whether your profit will increase, decrease, or there will be no effect. That is by doing it from the correcting entries. So while reading the errors, start making the correcting entries in a proper way, so that if you have to find out the effect on profit, or even if you have to correct the profit, right, sometimes the draft profit is given to you and you have to find out the corrected profit. So you will use your double entries in order to do that, in order to solve that part. Now let's move to last part, which is part D, and it says Razia is considering whether or not to sell on cash terms only. Okay, so just to sell on cash, no credit terms are allowed. Okay, advise Razia whether or not she should sell on cash terms only. Justify your answer with 2 advantages and 2 disadvantages of selling on cash terms only. Okay, so right now you don't have to talk about credit terms, you have to talk about the cash terms. 2 advantages means 2 points over here, 2 disadvantages means again 2 points over here, and then you have to justify as well, so you have to recommend. So in total 5 marks for this part, speaking in favor and in against of selling on cash terms only. Right. So let's brainstorm first that what will be the benefits of selling on cash terms only. First one will be cash will be received immediately. Right. Now since cash will be received immediately and there will be no credit terms, no credit period will be allowed to the customers, so the problem of bad debts will not be there. As no customer will be allowed to pay at a later date, so there will be no bad debts, you have to pay immediately. This is likely to improve the liquidity or the cash flow position of the business, as cash is coming into the business just at the point of sale. You don't have to wait for 15 days, 20 days, 30 days or whatever the policy was to receive the cash from your debtors. However, what will be the disadvantages? First of all, if she is selling on credit terms right now, or if there are customers in the industry who prefer paying at a later date, so they might not approve or they might not welcome this policy. This policy might put off some customers as they may not prefer this way of business, that you just have to pay there and then at the time of sale, and then they are not being allowed credit at all. So because of this, Razia's customers, some of them might prefer going to her competitors if they are still allowing credit terms, right? If they are still allowing a credit period of 10 days, 15 days to pay at a later date. Similarly, you can also talk about, after talking about the competitors, that this can also affect the market share of Razia's business if more customers switch to other businesses or the competitors. So now let's write this down. So you can explain it like that: if Razia sells on cash terms only, she is selling on cash terms only, then the chances of debtors becoming irrecoverable debts, that is bad debts, will be eliminated, right? Because she doesn't have to wait for the debtors to pay at a later date, as cash will be received immediately. This will improve cash flow or liquidity position of Razia's business, right? So another benefit is that this will improve the liquidity of the business. So 1 point over here, 1 point over the elimination of the bad debts. However, now we are moving towards the drawbacks. However, she will lose those loyal customers that preferred buying on credit. So there are some customers who might have preferred buying on credit. Because of that, they were coming to Razia. Just one mode of payment, that is buying or that is selling on cash terms only, can prove inconvenient to some customers, and they may decide taking their business to a competitor. So this could be the another drawback, that she might lose some sales. Therefore, now last, coming towards your justification, towards what do you recommend. Therefore, in my opinion, right, this is just my opinion, you can write whatever you want, that prefer cash terms or don't prefer them at all. I have written that in my opinion, Razia should use a hybrid model. Hybrid model means sell on cash to some customers and on credit as well. Why just stick to towards one policy? Use both of these, right? Benefit from both of these. By doing how? By maintaining a strict credit control policy, a strict credit control, that if I am suggesting that go towards just credit, selling on credit, or using a hybrid model, then how do you go about it? Maintain a strict credit control policy, that is keep a check on your customers. Don't sell to those customers who have a history of going bad. So before selling to a new customer, to a new debtor, you should inquire about them from other suppliers that they have been doing the business with, and sending continuous reminders to your customers that now your date will be due, your payment date will be due, so please make a payment on time. Or you can also say, or credit control policy also includes that giving discounts on prompt payment, right, on to encourage early payments, so cash discounts, right. So all of these points come in your credit control policy. You don't have to write them down, you don't have this much time and space. Just mention that by maintaining a strict credit control policy, she can go with the credit selling on credit terms. And why am I suggesting this, that maintaining a strict credit control policy with the hybrid model, so that she doesn't lose sales in any possible way, right. So she will be selling on cash to those customers who prefer paying on time, right. So again, no possibility of bad debts. And if she wants to sell on credit, then how? By maintaining a strict credit control policy, right. So this is how you can write your answer for 5 marks. Alright, so this was the last part, and that's it for this video as well. I'll see you in the next one.